Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US and Europe futures climb on hopes President Donald Trump's next wave of tariffs may be more targeted than first feared. Officials say some countries will be exempt. Productive and focused. That's how US and Ukrainian officials are describing the peace talks in Saudi Arabia to end Russia's 3-year invasion. US and Russian delegates set to begin meeting in the next hour. Plus, Turkey bans short selling and eases buyback rules. This the latest move to support markets after the arrest of President Erdogan's main political rival sparked widespread protests. Good Monday morning. European futures on the front foot on the details coming through, at least reporting from Bloomberg and others, that the Trump administration is looking possibly at slightly more restricted tariffs in terms of April the 2nd as we build up to what is likely to be still a consequential date, of course, for global trade. European futures currently pointing to gains of 0.3% after some modest upside last week. FTSE 100 futures on a massive week for the UK as well, particularly the Chancellor Rachel Reeves on Wednesday with the autumn statement, spring statement. Currently, FTSE 100 futures pointing to modest gains around 0.2%. S&P futures stateside looking to add 0.6%. So set up for a strong session Monday after some gains that came through last week, snapping 4 straight weeks of losses for US stocks. Nasdaq 100 futures looking to add 157 points. Let's flip the board and have a look cross asset. That focus on the 10-year yield by the Treasury Secretary Scott Bessent, subject to a piece of reporting from Bloomberg this morning as well in terms of a potential Treasury and Bessent put. We'll unpack that story for you. 428 right now on the benchmark 10-year yield. Yield's actually up 3 basis points in the session today. The pound in focus ahead of that statement, that spring statement, of course, from the Chancellor. 129 right now on the pound. Oil currently relatively well supported at $72 a barrel, then just down around 0.2% in the session today. And gold remaining close to those record highs above $3,000 for the yellow metal. Let's briefly check in on the Asian markets as well. We have a reminder of the innovation that continues around the AI space, this time coming from Ant Financial, which is part of the Alibaba group, and that continues to support the theme in China around tech and AI innovation. Broadly across the benchmark in Asia, the MSCI Asia Pacific Index currently down 0.2%. The CSI 300 on mainland China modestly higher, flat essentially in the session so far. Hang Seng Index over in Hong Kong currently down 0.2%, and you're seeing some losses in Japan as well, but only 4 points. Currently, the Nikkei is essentially flat. Now, to the tariff story and the reporting out of Bloomberg. US and European futures climbing, as we talked about, on signs that Donald Trump's next wave of tariffs may be more targeted than initially planned. Reciprocal tariffs then expected to be announced on April the 2nd. Bloomberg M-Live strategist Mark Cranfield joins me now for the market reaction to this story. And in Mark, it looks like a relief rally for equities on a slightly more nuanced picture when it comes to these planned tariffs April the 2nd. The question, I guess, is to what extent is the upside that we're seeing in the future story today sustainable, at least in the short to medium term?
Yeah, morning, Tom. Not very sustainable, I suspect. It's no wonder we're seeing a knee-jerk reaction. As you said, US equities have had 4 weeks of pretty poor performance. So when you get a report suggesting that the tariffs might not be as far-fetched as they were originally reported to be, then people probably would be slightly relieved. But it's unlikely that we can expect that President Trump will enact tariffs that miss out the major counterparties. So all the big trading partners of the United States are probably still going to get tariffs put on them. There may well be retaliation from some of those, particularly the Europeans are expected to do that. So by the time we get to next week, investors will still be expecting that the trade war is still on. There's not really much of a change from that point of view. So any kind of relief we see today, maybe tomorrow, probably isn't going to be lasting very long, because the end game is that the trade war is going to continue. It's going to put pressure on what people see in terms of their margins, how to plan businesses. It's not really that much different to what it was a few weeks ago. So all of those threats really are still there. The business community still has to put up with these kind of things. They've still got to manage it. It's going to dampen expectations for earnings. That's going to put people back into haven plays. So even though we may see a little bit of improvement now. It's unlikely that US equities can get back to any kind of the levels they were in January at the start of the year. They're still likely to underperform. And the big threat to US equities is the fact that other parts of the world are becoming more interesting. The European story is gaining traction, as it is in Chinese tech as well. Another big story today, that Alibaba has found a way through Ant Financial to produce AI-related products at a much cheaper cost as well. So there's traction in the China story. Germany has approved a big defense spending as well. That's going to gain traction to what's going on in Europe as well. So those things are places which were not previously on the agenda for US investors. There are now major alternatives to where people can push their money away from the United States. That's a very important dynamic, and it's something that global investors haven't really dealt with in the past few months.
OK, could be short-lived then in terms of the upside that we are seeing, at least temporary, when it comes to the US stock story on the tariff details. Also, we lead up to April the 2nd. The context in terms of the market reaction from MLive strategist Mark Cranfield. Mark, thank you. Analysts, meanwhile, are trimming their year-end forecast for US 10-year yields. And, of course, you can't think about 10-year yields without thinking about the tariff story as well. That's as Treasury Secretary Scott Bessent keeps reiterating the administration's plan to push them down. He's talked about how central that is to the policy agenda of the Treasury and, of course, of President Trump himself. So he wants to keep them there. Let's bring in Bloomberg's Valerie Teitel for the latest on this then. Valerie, to what extent is this a question of traders starting to price in a recession versus traders starting to price in a Bessent put that ultimately they will keep these 10-year yields capped either through jawboning or policy?
Yeah, that's right, Tom. There seems to be a new mantra out there. Instead of don't fight the Fed, it's don't fight the Treasury. When the biggest player in the Treasury market says they want yields lower, they are going to get what they want. We've seen that happen in the Treasury market lately. We started the year around 480 in the 10-year yield. We're now around 430. So a 50 basis point rally in the Treasury market. And as you said, Tom, some would point out this is less to do with Scott Bessent's words, but more to do about worries about an economic slowdown that driving a safe haven bid into the Treasury market versus anything about fiscal discipline coming out of the U.S. And to that, guys, we do have the PMI data today. Maybe that's going to show us where we go next on the U.S. Treasury market if we do get some disappointment in the PMIs. Because remember, we have this overhang on both sides of the Atlantic of this uncertainty when it comes to trade policy. So we do get the global flash PMIs starting here in Europe, 8:15 France, then Germany, Eurozone, and the UK, all coming out this morning. How will they balance the recent boost of fiscal spending from the defense packages in Europe versus this overhang of tariff uncertainty? We'll be keeping our eye to see how that plays out. If you flip on and just look briefly at this chart, I want to point out that, yes, last time around, we did get some upside readings and in manufacturing. Services numbers continue to come in soggy. But these French numbers are really still in quite deep contraction, Tom. The Olympics bump from previous summer has really faded, and we've gone nowhere strong in those French numbers. 45 was the recent reading on the French composite. So maybe within Europe, there is still an outlier of a weakening French economy versus Germany and the wider Eurozone above in contraction.
OK, so we watch for that divergence between manufacturing and services, but maybe a lens on France as well, given the recent disappointment there. Bloomberg's Valerie Teitel, thank you. Ahead of that data, dropping, of course, from around 8:15 UK time, which we will break for you. To the geopolitics now, where officials from the US and Ukraine have called talks in Riyadh productive and focused as they push to end Russia's 3-year invasion. US and Russian delegates are expected to hold separate talks today, shortly in fact. Joining us now for an update is Bloomberg's Piotr Skolimowski in Warsaw. Piotr, thanks for taking the time with the update. So these talks continue in Riyadh. What can we expect then, given that the focus now shifts to the US-Russia conversation?
Hi, Tom. So indeed, we had the first day of talks between US and Ukraine. They called it constructive. The main point of the discussion yesterday, and at least that's something that Ukraine brought into the table, was the list of energy targets that were not supposed to be hit by Russia. And that's something that we need to remember. Last week, what was agreed between separately between Russia and US and Ukraine and US was that there will be no hits on energy targets. However, since then, we continue to see both sides trading blows and hitting targets across the border. So at this point, that's one of the issues, hitting the targets or energy infrastructure on both sides. But also, what we also heard yesterday from Mike Waltz, President Trump's national security advisor, he said the next topic on the discussion, and it's probably something that's going to come up today, is the maritime ceasefire. So no targets being hit in the Black Sea, so that would allow for trade to continue. So that seems to be the main focus for talks today. They are happening in proximity, so separately in different with both sides, but we'll see tomorrow when the talks are going to wrap up, when things are probably coming to a head in terms of deliverables.
Piotr, is Russia making any concessions at this point, or expected to make any?
What we are probably seeing, and that's what Western experts are probably agreed on, is that Russia is trying to slow walk the process. Obviously, when we had this conversation between Trump and Zelensky, and earlier talks also in Saudi Arabia between Ukraine and the US, Ukraine agreed to a full ceasefire straight away. Meanwhile, after talking to President Putin, all that the U.S. managed to achieve was a ceasefire when it comes to attacks on energy targets. So, and that's easy. I mean, it's spring in that sense. Even at this point, it's not. It's a significant development, but still not enough in terms of getting towards the target. What we are actually hearing is that the U.S. is still hopeful that there's going to be a full ceasefire by April 20th, which is Easter. However, looking at how slowly the Russia is trying to slowly walk this process, it might be really difficult to achieve. At least that's what we're seeing.
Okay, yeah, the mismatch potentially between the Trump administration's optimism and the reality when it comes to the adjustments being made by the Russians and to some extent the Ukrainians as well. Bloomberg Central and Eastern Europe editor watching those talks, of course, that continue in Riyadh. Piotr Skolimowski, thank you for the update. Now, Turkey's capital markets regulator has banned stock short selling and relaxed buyback rules to prevent further market turmoil. The moves come in the wake of the arrest of President Erdogan's main political rival, which sent the lira to an all-time low. For more, let's bring in Bloomberg's Paul Wallace in Dubai. Paul, what do we see in terms of the market reaction today? To what extent is the unwind from Turkish assets set to continue today?
Hi, Tom. It's early hours, if you like, in trading today. There was a bit of a dip in the lira's value in Asia trading, but I think we're going to get a much better sense of just how nervous investors are about this political crisis in Turkey and how it's unfolding in the next couple of hours or so, when traders in the MENA region are at their desks. But certainly all signs point to more nervousness and strong signs of more selling happening today and possibly throughout the week.
And Paul, just remind our viewers of the significance of the formal arrest now, which of course took place over the weekend, of Istanbul's mayor and someone who was seen as a key, if not the key, opposition leader to President Erdogan.
Exactly. Ekrem İmamoğlu is effectively President Erdogan's main rival. He was almost, he was yesterday set to be announced as the presidential candidate for the main opposition party, and thus setting himself up for a head-to-head contest against Erdogan in the next presidential election, which is scheduled for 2028. But, there's a widespread expectation that it could come before then, that the government could call a vote before then. He is easily the most high-profile figure that's been ensnared in a sort of in a series of lawsuits and investigations against opposition figures and opposition-linked journalists in recent months. I think a lot of investors were hoping that Erdogan wouldn't go after İmamoğlu, that Erdogan would see İmamoğlu as sort of a step too far, because it would be too risky in both the markets context and also the international environment. And it's important to note that while markets have obviously sold off heavily in Turkish stocks and the currency were easily the world's worst performers last week, the international environment doesn't suggest there's going to be much of a blowback on Erdogan. The US has been very muted and has effectively dismissed it as an internal concern. The EU is not happy, but this comes at a time when the EU really needs Turkey for its growing defense needs, especially with their fears that the US is going to sort of backtrack from Europe.
OK, Bloomberg's Paul Wallace, who leads our Middle East economy and government coverage on the latest out of Turkey. A story, of course, we continue to watch with a lens on the markets. Thank you, Paul. Coming up, China says it is prepared for, quote, shocks that exceed expectations when it comes to US President Trump's tariffs. We're going to dive deeper into the trade tensions between the two countries. That is next. This is Bloomberg. US Senator Steve Daines says China must stop the flow of fentanyl ingredients into the US before any further trade negotiations. Daines spoke exclusively with Bloomberg after his trip to Beijing, where he met with Chinese leaders, including Premier Li Qiang.
It'll be difficult to have any conversation about tariffs and non-tariff barriers until the fentanyl precursor issue is resolved. President Trump's position was heard loud and clear, and the Chinese received that. They understood it, and we're hopeful that we'll see decisive actions taken to stop the flow of these precursors.
OK. Senator Steve Daines speaking to Bloomberg there, and for the context, someone who was very close to President Trump as well, hence the importance of his take on the relationship between the US and China. For more, let's bring in Bloomberg's China economy and government editor Alan Wong for some more details on this, on a big week for Beijing, hosting a couple of summits over the weekend and the Boao Forum later this week. Alan, what does this mean then for a summit between Xi Jinping and Trump? President Trump has talked about wanting to sit down with President Xi. Here we have a reminder of the importance of the drug issue, the fentanyl issue, and the role that Trump and the US at least believes China plays in that. Where does this leave expectations around a potential presidential summit?
Yeah, exactly, Tom. A quick step back to why a senator from Montana is talking about this matter in the first place. He had a chat with Trump about this coming trip in the Oval Office and said he would talk to China about the fentanyl issue. This trip has all the trappings of a semi-official trip to figure out just what terms both countries could accept in leading up to a leaders' summit. But as we heard from Daines himself, he highlighted the U.S. demand that China stop the flow of fentanyl precursors into the U.S. as a condition for any further talks on tariffs and other non-tariff barriers, which means that what Trump said was Xi coming to Washington very soon might be more uncertain now.
Alan, what are you and the team going to be watching for in terms of how these US-China relations evolve from here, particularly when it comes to trade?
Yeah, so now that the U.S. has pegged the trade issue to the fentanyl topic and expect China to aggressively crack down on fentanyl ingredients into the U.S., we have to wait to see what China does in response, because China has already said that it has done all it can for the U.S., and that Washington actually owes China a big thank you for doing so. In the coming weeks, we have a couple important dates to watch out for, including April 1st, which is when a U.S. report on China's compliance with the Phase 1 trade deal will come due. And then the next day, Trump has said that he will impose reciprocal tariffs globally in what he called a liberating day. So those measures may come that day or in the coming weeks, but what we know for sure is that China will retaliate against any U.S. measures directed at China, as it has in the last two rounds of tariffs. So those 2 dates, we'll see this exchange of trade salvos, and once again, if the tensions get worse, the two countries will have to find another window for them to initiate high-level talks.
OK, Bloomberg China's economy and government editor with that update. Alan Wong, thank you. Now to the Middle East, where Israel has killed 2 members of Hamas's de facto cabinet in the Gaza Strip. The Israeli army says Salah al-Badawil and Ismail Bahoum were hit yesterday in South Gaza by airstrikes, which resumed last week after a truce expired. More than 50,000 Palestinians have been killed in the Israel-Hamas war. That is according to the Hamas-run health ministry in Gaza. Coming up, the clean energy transition facing its latest test from tariffs. We're examining the potential impact and bring you some analysis. That's coming up. This is Bloomberg. Welcome back. The threat of tariffs upending global trade may also impact the transition towards renewable energy. Bloomberg NEF analyst Matthew Hales joins me now for some details on this, crunching the numbers, the facts, of course, and the analysis on this area and the impact of tariffs. So we're looking ahead, of course, to April the 2nd. It's expected to be another day in terms of tariff announcements from the Trump administration. What is the likely impact? What is your understanding, the team, of the impact on these trade wars when it comes to the energy space, particularly the energy space focused on this transition?
Well, the big picture is that across technologies that we need to rely on for the energy transition, China holds a dominant position in their supply chains. And because of that, what we've been seeing in the past couple of years is some really interesting trends. There's 2 main things. The first is the EU and the US are both trying to decrease their reliance on China and attract investment at home. The second thing is that Chinese manufacturers are looking to set up shop elsewhere and invest in those countries. Now, what trade and these tariff barriers have done, excuse me, is that they've thrown grit into the machine. There's now greater uncertainty and firms are basically waiting to see where they should be deploying capital and where they should be setting up.
OK, so there's a bit of wait-and-see attitude coming through from companies, keeping their powder dry until they get more clarity. And we'll see when we do get more clarity. But clearly the uncertainty is there. So that's a headwind. When it comes to reciprocal tariffs, again, you have the retaliation threat from the EU and others. You have the reciprocal tariff threat from the Trump administration. Who is most exposed at this point?
So we think that emerging markets could bear the brunt of the tariffs that are coming on April the 2nd. And the real reason for that is that China is already hit by such high US import tariffs. And it's very keen that we have to look at what the reciprocal tariffs are based on. So they're based on the tariffs that are applied to US imports into whichever country, and then any other restrictive policy which impacts how US goods will compete with locally made goods. Now, what that is, it's really tricky to actually measure that. And these have been tactics that emerging markets have increasingly relied on and also historically relied on across different industries. And so they may well bear the brunt.
OK, Matthew, thank you very much indeed for the update there. Matthew Hales, analyst at Bloomberg NEF, on how the tariff regime is expected to impact the supply chain around the transition and renewable energy, with China still playing that dominant role, of course. Coming up, we're going to discuss the impact of President Trump's incoming tariffs in other details and with a different lens, this time when it comes to those emerging markets, something that Matthew was just touching on as well. This time with Louis Costa from Citi. So we'll focus in on the FX space and what is happening around fixed income in EM with Louis Costa and the impact on Trump tariffs. Stay with us. This is Bloomberg. Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US and European futures climb on hopes President Donald Trump's next wave of tariffs may be more targeted than first feared. Officials say some countries will be exempt. Productive and focused, that is how US and Ukrainian officials are describing the peace talks in Saudi Arabia to end Russia's 3-year invasion. US and Russian delegates set to begin meeting in the next hour. Plus, Turkey bans short selling and eases buyback rules. This The latest move to support markets after the arrest of President Erdogan's main political rival sparked widespread protests. In the markets then, European futures pointing to gains after some upside across the week. Last week for European stocks, US futures also pointing to some upside. The S&P 500 looking to gain 0.7%. Nasdaq 100 futures pointing to gains of 154 points. When it comes to the FTSE 100, a big week, of course, as we lead up to the spring statement on Wednesday out of the Chancellor, looking to modest gains of about 0.1%. Let's flip the board then and have a look across assets. The US 10-year after that Fed decision, of course, as expected, to hold pat, but expectations, or at least building out the views around the lack of clarity when it comes to the tariff initiatives and the impacts on inflation, and the word transitory being used once again. 428 right now in the benchmark 10-year with yields up 3 basis points. The pound in focus at 129. We await, of course, manufacturing and services data, not just out of the UK, but out of the Eurozone as well, France and Germany from around 8:15 UK time. Brent trading at $72 a barrel and gold remaining close to those record highs, above $3,000 per troy ounce, currently flat in the session. Let's briefly check in on the Asian market session as well. We've had a reminder from Ant, which is part of the Alibaba Group, Ant Financial, and its innovations around AI, a reminder of the innovation that continues out of China. The benchmark MSCI Asia Pacific Index is down 0.2%. The CSI 300 over in mainland China currently up 0.3%. And the Hang Seng Index in Hong Kong is flat, and the Nikkei over in Japan dropping by 68 points. We're checking in on Turkish futures as well, of course. We had the formal arrest of the mayor of Istanbul, and of course someone who was seen as a key opposition leader as well, potentially to President Erdogan. So we'll check in on the Istanbul futures when we get that mark up, and we'll bring that pricing for you. Not seeing it right now, but we'll get the pricing for you when, of course, it is across. We'll get the chart updated and bring that to you. Let's get to the broader emerging market picture right now, with that focus, of course, on the tariff risk coming through on April the 2nd from the Trump administration. Of course, what we've been hearing from the Federal Reserve, and bring in Lewis Costa, Global Head of Emerging Market Strategy at Citi. Lewis, good morning. Thanks for coming in.
Good morning.
Which parts of the EM space that you and the team look at are most vulnerable to these additional tariffs that Trump has promised come April the 2nd?
We believe economies, they are very open. They rely a lot more on open trade. And the attribution of growth is important in terms of net exports and the impact of net exports and growth. And obviously, I think the industrials, they tend to be probably in the grand scheme of things in terms of reciprocal tariffs, industrials, OEM industrials, they tend to be more affected as well. So if you put this together, obviously, you know, some jurisdictions, they pop up, they stand out. I mean, can be the case of Central Europe, some parts of emerging Europe, which are extremely well integrated into the manufacturing cycle in Europe, which is already down, right? And some parts of Asia as well, right? I mean, part of the so-called China supply chain, which, you know, in a way, is already taking that into account. It's very difficult to say that currencies, most of the currencies in yen, are not taking into account the very high probability of reciprocal tariffs, you know, already in the system.
So there is already priced in an element
Absolutely.
when it comes to these tariffs, when
Absolutely.
it comes within the FX space. Is that an opportunity? Is that an opportunity to go long then, if the tariffs come in and are slightly more directed, more targeted?
Well, I think it's very interesting, right? Because if you look at, you know, the price action since November, December last year, what we had in many instances, we had dollar relief, meaning, you know, a little bit of a dollar sell-off because markets were hedged. Right? I mean, currencies were kind of prepared, 20, 30, 40% prepared in terms of, you know, tariffs impact. So, I mean, yes, that's absolutely possible if you go into a more target. And it's quite interesting because if you know, play the movie so far, it's been a short movie, but if you play the movie so far, we haven't gotten the worst yet out of the tariff policy, right? I mean, there has been negotiations and there has been a lot of backtracking from the U.S. administration in terms of being super abrasive.
What is the key driver of the dollar right now?
Well, I would say twofold. It's definitely euro effects. I mean, and now we are in an environment where euro effects is seeing a resurgence. I mean, mostly on the back of sentiment that has to do with the defense infrastructure and, you know, the possible fiscal overhaul. And
has it run too far, the euro?
I don't think so. I think we can have, further lags here. Now, it's very difficult. Real effects, it's not only from the sentiment point of view, it's also from the fact of investment flows, right? This is a market, if you look at European equities, they were not necessarily overowned by, global asset managers out there. I've been talking to so many CIOs out there, and the question mark is, when is the top? And it doesn't seem to be the case as yet. And obviously, the second factor here to form the broad dollar is renminbi, right? And knowing that there's another interesting factor in affecting the Chinese economy, the Chinese market, which is this, and it's brand new, which is China tech. This is 1 month old. And I find it's interesting. The European investors are not discussing this enough. And this is obviously changing, at least in the short and medium term, capital flows into China. So not necessarily groundbreaking fiscal news out of China, but yeah, there's a little bit of animal spirits in the form of the DeepSeek and China tech.
So that draws flows into the Chinese market.
Absolutely.
Looking for that exposure. That supports the renminbi, and the renminbi holds that support in the face of these additional tariffs. 20% already imposed, so maybe it's already fully priced into the renminbi.
We've been actually shying away from new renminbi shorts at the moment because of exactly the factors that you just mentioned.
Is it the onshore or the offshore renminbi that you want?
We normally trade the offshore, the CNH, but obviously, this is a derivative of whatever happens to local, the CNY.
Lewis, over in Riyadh right now, there are conversations and talks going on between Ukraine and the US, Russia and the US as well. Do you start to put in place, how are you positioning around Russian assets? We've been some reporting around particularly hedge funds and others looking to get that exposure in anticipation of some form of ceasefire and possibly sanctions relief. How are you thinking about the Russia story?
We've been very early in this cycle. You remember, back in November, we were already talking to our global investors, global clients, basically to prepare. Back in November. To prepare, because we knew that was our view, that one of the major short-term geopolitical targets by the new Trump administration was going to be a ceasefire effort. We are right in the middle of it. So, we are not, it doesn't surprise the Riyadh summit, and there will be, further rounds of negotiations here. It's going to be very difficult to hit the bullseye right away. We know there are so many moving parts and so many interesting conditionalities here. It's still pretty much embraced by the Kremlin. But we do believe this is a process that will continue to unfold. The problem is many assets already reacted to it. If you look at Ukrainian dollar bonds, they've been rallying, for the past 4 or 5 months, right? That was probably one very important vehicle we've been positioned there. And we already took profits in our strategy recommendations. Ruble and DFs, already, we've been long, we already took profits. But I still believe that, we are probably at 2/3 of the process here. There will be further lags of appreciation here. Now we are starting to get into the tough moment. Then we get into details, what does it take to get to the ceasefire? And that's definitely the tougher moment of this negotiations process.
Okay, so you're thinking about this already back in November, and now is the tough moment when it comes to the details. Before we let you go, other top trades, Lewis, that you and the team are thinking about in this moment of heightened uncertainty?
Absolutely. I think it's, the main derivative here for emerging markets now, as we mentioned, is the downward pressure in global growth, in trade growth. So, we do believe that, many investors, many jurisdictions should be under pressure here in terms of short-term growth. It's going to be the case of Mexico. It's probably going to be the case of Brazil, which is obviously suffering from very high interest rates. So we generally like long bond positions there, controlling the FX risk, of course, but we do believe it's a market to receive interest rates in many emerging markets jurisdictions, and we continue to stick to this trade.
Okay, the long duration trade.
Absolutely.
In EM. Lewis Costa, always smart. Thank you very much indeed for coming in bright and early to the studio this Monday. Lewis Costa, Global Head of Emerging Market Strategy at Citi. Let's bring you up to speed on other stories making news today. Then Canadian Prime Minister Mark Carney has called an election for April the 28th after requesting the dissolution of Parliament. Polls indicate the race will be a close one between Carney's Liberal Party and the Conservatives, led by Pierre Poilievre. Both parties have promised tax cuts and are making the case for who would be better at negotiating with President Trump over tariffs.
President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal, but we should never forget the lessons.
Ireland's Prime Minister, Michael Martin, says that Ireland's open economy is particularly vulnerable to the across-the-board tariffs that Trump has pledged to impose on April the 2nd. Martin told Bloomberg's Oliver Crook exclusively that the EU should take a measured but firm approach to any retaliation.
Because we can easily be sucked in to sector by sector, and there's potential for significant division across the EU in terms of how we respond.
The UK is aiming to cut the number of civil servants by 10,000. That's as it targets a 15% reduction in the government's operating costs. The planned cuts come ahead of Chancellor of the Exchequer, Rachel Reeves' key update on public finances. That's on Wednesday. The headroom that allows Reeves to meet her own fiscal rules has been wiped out since her budget last October. Heathrow Airport's unprecedented blackout on Friday has raised questions and concerns about its reliance on potentially vulnerable infrastructure. National Grid CEO John Pettigrew told the Financial Times that the electricity transmission network remained capable of feeding enough power to Heathrow throughout the airport's closure last week. An investigation has been commissioned to determine the circumstances surrounding the incident. To China now, where the best-selling automaker BYD is due to report full-year earnings today. Revenue could top $100 billion. That would be a first for BYD that would also put it ahead of one of its key rivals, Tesla. Joining us now for a preview is our Asia Transport reporter, Danny Lee, who has always followed BYD in great detail. Danny, is BYD's hot streak then set to continue? The $100 billion revenue mark could be surpassed.
Judging by the expectations of earnings it will deliver for the full year of 2024, yes. As you said, $100 billion or estimates for 766 billion yuan overall. So a decent number above that, and very strong set of earnings overall. So record highs as they continue to grow, having sold 4.25 million passenger EVs and hybrids in the past year. And when we look at the outlook, it is looking to sell even more this year, up to 5 to 6 million vehicles, and it's already had a strong start. So that tailwind it had of a very strong 2024 looks set to continue. And with so much more attention on BYD, frankly, given its standout unveilings of super fast charging, amongst other things, there is a lot more attention from investors on this company. And you can see already the stock is already up almost 50%.
Yeah, as you and the team have reported, the charging in just a matter of minutes to get hundreds of kilometres in terms of battery power for these vehicles. It's not. What are the challenges there, then, Danny? Where are the flies in the ointment when it comes to the BYD story?
Well, there are still concerns over delivery and execution. Its targets are continually getting higher and tougher, and so therefore it has to deliver. And it generally is very good reliability in terms of making sure it hits those targets. But still, globally, as it tries to push abroad outside of China, there is that risk of tariffs, right? We've seen the saber rattling from Donald Trump with China. We've seen Europe push back on Chinese EVs. And so therefore, for BYD, as it pushes all over the world, there is that existential risk of, as it continues to push, it may be slowed down, and that could hinder in its selling targets as well. So it's not all smooth sailing as it tries to be a top global automaker.
OK, Bloomberg's Danny Lee in Hong Kong ahead of those earnings from BYD. Danny, thank you for that preview. And, of course, we'll break those numbers for you when they cross. Let's get a touch now on the picture when it comes to Turkish futures. Following another dramatic weekend, of course, protests across Turkey and the formal arrest and detention of the key opposition leader and the mayor of Istanbul, of course. And the picture right now is, in fact, positive. Gains of a little over 2% on the Istanbul futures. We'll see how that evolves. This after some measures put in place around short selling and a meeting between the Central Bank of Turkey and some key lenders as well. So a story that we keep across for you and checking and continuing to check in on Turkish assets, on the politics of that country. Coming up, we're going to discuss investment in European tech startups with a partner at venture capital fund Northzone. Investors who took stakes in companies like Spotify and Klarna. That conversation is coming up next. This is Bloomberg. Bloomberg has learned that Ant Group developed techniques for training AI models using Chinese-made semiconductors, which could cut costs by 20%. Jack Ma-backed Ant is said to have used domestic chips from Alibaba and Huawei to train models. Sources say it got results similar to those from some NVIDIA chips. Ant is still using NVIDIA for AI development, but it's apparently now relying mostly on alternatives, including from AMD, as well as Chinese chips for its latest models. Europe is trying to play catch-up, of course, when it comes to the US and now, arguably, China when it comes to funding for artificial intelligence. Last month, the EU announced a major plan to expand AI infrastructure. It comes as momentum grows behind new tech companies on the continent. Last year, funding for European artificial intelligence startups hit a record high. What does that tell us about opportunities then within European AI and the developments here? Very pleased to say that we can now bring in Pär-Jörgen, a partner at Northzone, a venture capital fund which was an early investor in Spotify. Other names within the portfolio include Playdots, Klarna, Price Runner, Jasper. There's a number of them, and the successes are there. Per, thanks for joining us this morning. I want to talk. Where in the stack when it comes to European AI are the opportunities that you see?
I think primarily in the application layer on top of the large language models that are rapidly becoming commoditized as we speak, where the big platform companies are throwing enormous amounts of money to build positions for themselves. But I think the real value will accrue at the application layer, and that's where funds like us at Northzone dedicate most of our time.
Are you concerned about adoption levels? Is there a gap between the innovation and adoption, particularly at the enterprise level?
Not really. I think that, for instance, one of our portfolio companies, Tandem Health, has just been around for a year and a half. And the healthcare industry is notoriously slow to adopt new technology. But that product, which is basically an AI scribe for physicians to make the meeting with their patients much more smooth and automate the process around that is formally flying off the shelves and is improving the work of the physicians and improving the safety of the treatments. And that is the kind of adoption scale that we see in not only healthcare, but also in everything from tax to various kinds of administrative flows that previously have been very cumbersome, slow, and inefficient.
Okay, so that's interesting on the adoption then, and I wonder if you think this is the year when we put the hand wringing and the concerns around return on investment, where that question is finally answered. I mean, there's all the innovation out of China that we're seeing and question marks about what this means for companies like NVIDIA. But the return on investment for all this capex, do you think that becomes less of a source of angst this year?
Well, I think the sort of the foundational layer was created at a great expense, but I think now that's when the real business value is being created by all these apps on top of these, and you know, we see growth rates that we've seldom seen before, far outpacing any other super cycle we've seen, and if you add on to that there is the results of the sort of the deglobalization, there is an increased focus on the European infrastructure in this regard and the European investment opportunities. So I see almost like a golden age awaiting for Europe right now.
And how much of that is down to a focus on sovereignty in Europe and self-reliance? And how do you play that?
Well, I think so the capital flows have been strong into the venture capital community in the early stages, but it's been relatively weak in the later stage. And that's where you scale a company from maybe $2-3 billion in valuation up to $20 or to $50 billion. And that's the part where there is still a funding gap in the European market, but that is something that's being increasingly addressed now. And I went to a summit with the European Investment Bank in Luxembourg a couple of weeks back, and they were really committed to make sure that European funding from pension funds and others will start to flow into this sector, which has a lot of promise for generating returns.
Okay, interesting in terms of the developments around the later stage funding that Europe still needs, but maybe some pieces coming and being put to play in terms of the need there. Pär-Jörgen Pärson with the context, Northzone partner and of course investor as well in companies like Klarna and Spotify. Thank you very much indeed for that take on some of the evolutions in European AI and technology, with a particular focus on healthcare as well and the gains coming through there. There's plenty more coming up. Stay with us. We're going to touch in on the health of the US economy and break down some of the stories there on recession risks flagged by some. Stay with us. This is Bloomberg. From don't fight the Fed to don't fight the US Treasury, and Scott Bessent with that focus, laser focus, as he's described it, on the 10-year yield. And the work has been done to bring that down, around 34 basis points, as you can see, since the inauguration of President Trump. Some of this is down to jawboning. Some of this, of course, is also down to recession risk. But we have increasingly analysts saying, don't fight this Treasury at this point in terms of the downside expected on the yield story when it comes to the benchmark 10-year. Talking of recession risk, let's flip the board and have a look at the Atlanta Fed Now view. Still looking and still flagging, as you can see, a recession. This is where we're at right now. We'll see how the data lines up around that story, of course. The Fed last week, recession risks remain. The opening trade is up next. This is Bloomberg.